Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, so we are live here with a good buddy of mine, Vishal Harishchandra. Known him for a good amount of time now. You know, he needs no introduction, but I'm just going to give a quick overview, and then Vishal is just going to go deep on his story. He's got a lot of stories. I've gotten a chance to get to know him over the course of dinners and cocktails, and when he's come out to New York. So really excited about this episode. But just, really high level, Vishal Harishchandra is a seasoned entrepreneur and owner of the Vulcan Group. And he's also the founder of Elite Models in London. The Vulcan Group is a family office and trading company that has global interests in media, fashion, real estate, private equity, and philanthropy, films, and trading. And Vishal is also just building a really exciting financial technologies company that I got to know about. So he's going to go deep into that too. But Vishal, welcome to the show. Thanks for finally coming on. I know you're super busy, so I appreciate you making time for me.
No, anything for you, man. Happy to do it. It's 9 p.m. Just put the kids to bed, so
I
they
know
won't
how
be
it is.
hijacking on the
No, I know. Well,
call.
if they come in, it's okay. We all get it. Many of us have kids, and I've had people hijack before. But I'll try to catch you before somebody pops in. Why don't you just give a quick overview on your origin story? Some of the early ventures that you built. Would love to hear. I don't think we went through this. I don't think we went through the actual origin story of Elite Models and how you got into fashion. So maybe we could start with that, and then we'll just run through it as we go.
Yeah, absolutely. Well, you already know us. We're a single family office between New York, London, Singapore, Hong Kong. We do investments across the board. I'm a serial entrepreneur, founder, investor. Basically, I'm eternally unemployable. That's what it means. That's in a short story. So I have a disease. It's terminal. I'm gonna die like this. So I started my first company when I was 23. I built a few of those, three of them, and I sold it in my 20s. And then I started Elite Models in London, and then I was on the board maybe 10 years. I sold that about 10 years ago. I'm just getting older, man. When you start talking to people and you're like, I started my first company before you were born, that starts to sound old,
Yeah,
right?
sure.
All right. Um, but yeah, no. So it's been a great journey, and we're excited about what we're doing now. We're actively investing. We have this portfolio company of ours. We're investing in the supply chain and AI agents, and we're looking to go public on the Nasdaq soon. So yeah, it's really good fun.
So tell me, how you started, maybe, Elite Models. Maybe that was a more prominent
Mhm.
company that most people know about. So, and I think you had a co-founder as well. So how'd you guys come up with the idea, and, what were maybe some of the biggest learnings as you're building that company, and maybe learnings too, while you're at it with selling a company, maybe advice in terms of, thinking about the exit, whether it's cash or equity, maybe some lessons that you got to share around that.
Yeah, yeah. So it's funny, I didn't have a co-founder. I had
Mhm.
partners that
Sure.
eventually I sold into. But so Elite Models, that was a funny story. So that, Elite's been around forever, right? Since the 80s. So you have John Casablanca, Alain Kittler, Gerald Marie. So those are the original guys in the business. And I was a founder in the UK in 2008, 9. So I was actually in the process of setting up my own agency in New York, Paris, London, Milan. And I started with London, and then the recession happened, right? The Great Recession. And I
Sure.
was getting royally hammered in property investments and across the board, right? Liquidity dried up. So so the guys in Paris heard about me. They said, they give me a call and said, Vishal, what my gift has always been with good people, right? I like finding the right people, the right team, assembling them. And I put this really superstar, all-star team together in London. And we had some supermodels already up with us. And then Elite called me and said, Vishal, we've been trying to open London for years. We could never find the right team. So I said, okay, give me some money, give me some supermodels, give me the brand. We got a deal. I did that deal inside 4 months. I set it up and I sold them an equity stake. And then we were public listed on the Frankfurt Stock Exchange. And then eventually my partners, they sold to another gentleman. He's an Italian telecom entrepreneur. And, he bought it, delisted it. I think he put a couple $100 million into it. And then he was kind enough to make me a generous offer. That was about 10 years ago. And, we did the exit. And it took us a couple of years to negotiate that deal. And yeah, that was the whole story. It was fascinating. It's just the right place, right time.
Sure.
You're doing your thing, hustling, and then the opportunity sort of presents itself.
What advice would you give to, entrepreneurs that are trying to negotiate an exit or look for an exit? And this probably dovetails into, some of the acquisitions or buyout strategies that you're looking for. So maybe advice for both the investor and then also the business person trying to sell their business.
Right. Look, depends how you do go about defining an exit, but
Mhm.
you got to plan for it. So we plan
Sure.
for everything, right? You have a rough plan, and then you can always flow with the tide, as it were. So if opportunities presents itself, you say, okay, I'm going to pivot. Depending on market conditions, you can always make a second plan, but you have to have a basic plan in place. So I don't think I've ever had an exit where it just happened out of the blue. We were
Sure.
planning for that for years. Um, and again, some people that want to go public, they confuse that with an exit event. It's actually not an exit
Mhm.
event. It's a liquidity event. So
Sure.
that's my biggest advice I would give founders, right? Just because you're worth, a couple of 100 million doesn't actually mean it's liquid. Now, if it's an M&A event and you get a buyout, that's a different story. That's a true exit. And for investors, I would say the same thing, right? You got to be mindful about when doing private investments. You could be stuck in there for 3 years, 5 years, 10 years, 20 years, who knows? So I would suggest backing entrepreneurs that have a history, at least, who have done exits before, been through the trenches. But then again, you can't win them all, because sometimes you'd like investing in young founders that haven't done this before, and you're prepared to take the ride with them, the journey.
Sure.
So it's a different mindset, really. And also, I guess
Yeah.
it depends on which stage of an investor you are. If you're a growth stage guy, then you're looking for an imminent exit.
Mhm.
Um, and also, it depends on on the fund. If you're a family office, you're evergreen. You don't care 5, 10 years. That's fine. But if you're a VC fund, a private equity fund, you're coming to end of fund life cycle. Now you have to return money to LPs. So a very different ball game.
Sure. Yeah, I totally agree. When you're thinking about, building teams, because you mentioned working with good people, I feel like we've gotten along because we just, have the same mindset and we just like doing stuff together, right? So I think when you pick
Mhm.
people to work with, what are some of the things that you observe that makes them maybe a good person to work with professionally and just maybe as a human being as well?
Yeah, absolutely. So when we do investments, even now we do private credit, right? So we do lines of credit and stuff like
Hmm.
that. And we invest in small businesses all the time. The first thing we look for is integrity. That's the number one factor
Sure.
that we look for. After that, you want the guy to be smart or the girl to be smart and hardworking. But again, to quote Warren Buffett, right? If he doesn't have integrity, the other two don't matter. In
Yeah.
fact, if he doesn't have integrity, you want him to be dumb and lazy. You don't want him smart and switched on. So
Sure.
it's fascinating. Yeah.
Yeah. And you mentioned early on that you don't think you're employable. So what made you realize that? Did you try a couple jobs early in your career and you're just like, look, it's not working out for me? Or like what made you realize that?
Yeah, no, I was employed for 3 months, man. So that was I think the entirety of my corporate career. So,
Sure.
but no, I think it's a different mindset of
Yeah.
an entrepreneur. Uh, some people are just born to look at opportunity, find the opportunity, and then make a living out of it. And then also it depends if you like building stuff.
Yeah.
We've never raised money; we've always bootstrapped it. In fact, you know the story about how I started the first company in Dubai, right?
I do. Yeah, I remember hearing it,
Yeah.
but that's a great, maybe a
Right.
great quick story to maybe bring up if you don't mind.
No, no. Well, listen. I mean, you can Google it. It's a true story. So it's
Mhm.
actually now it gets surreal when you talk about it.
Yeah.
So I was in my 21, 22. It was like I was looking for capital to start my first business, and nobody would give me any money, right? So in Dubai, you have this thing called the Dubai Shopping Festival, so you can win a car every day. There's a raffle draw. So the deal was you go to a supermarket or a store, you buy 10, $20 worth of stuff, and they give you a raffle ticket. So, and they have this 1 month festival where every day for 30 days you can win a car. So I went into the gas station and I picked up like $30 worth of the telephone, the prepaid credits that you get for your phone. Um, and then I sold the credit. I got my money back. So I had the raffle ticket with me. I was like, okay, that's not a bad deal. So I would go every day after work, buy thousands of hours of credit. Then I would go door to door to the retailers, sell all that stuff, get my money back. And I was putting in like 50 raffle tickets a day, 100, 200. I think my peak was like 300 raffle tickets in a day.
Sure.
On the 27th day, I won the car. So
It's
I
just
still
because
remember
through
like,
through sheer volume, I'm assuming, because you just had all the tickets, so
yeah,
it's just
yeah.
improved your favor, right? Yeah.
Exactly. I figured, you're a young kid, no money for gas. You say, okay,
Sure.
how much lower can I go than zero, right? So,
Yeah.
um, and yeah, I sold that car. I got like 40 grand for it,
Hmm.
settled my debts, took a little studio. I slept in the office for 2 years.
Wow.
So that was the first business I ever started.
Sure. Yeah, I would say too, it's, a lot of times with sales or with marketing, kind of to your point of maybe what you learned, it's, volume, there's a fine line between volume and quality, right? So if you're
Mm,
filtering so much that you're looking for high quality, you only got like five people that you're talking to, right? But if you obviously have the entire audience and all the volume, then, you just got higher, statistically higher chances to kind of achieve your goals. So, volume goes really far, I would say, with marketing and reach. So that's something I've been learning with some of the businesses that I've been building. So,
yeah, yeah. I mean, for an entrepreneur, you got to have the mindset about, it's not about who's going to let me, it's about who's
mhm,
going to stop me.
yeah,
That's the mindset, right?
sure.
And the only advice I would give entrepreneurs is honesty, like with your investors,
Mhm,
with your friends, your family, your employees. Uh, I always give it straight, right? Bad times, good times. I always give the news, and then we just deal with it. Like in the recession, I remember I had to fire everybody, a lot of people, and I said, listen, I can fire half the people in this room. I gather everybody around, or everybody takes a 50% pay cut for the next 6 months. You guys decide, you vote. And we sort of had a call and we decided, okay, everybody's going to take a 50% pay cut.
sure.
So hard times.
Hmm. Yeah, I totally agree. I mean, breaking through walls, being able to handle hard times is super important. And then, would love to talk a little more. This one's really special to me because, as you kind of, maybe we can go through this too, but just kind of the evolution. Walk us through what you did after Elite Models, just so the audience knows. And then, we've had a few conversations early on about just, ocean and kind of the whole concept of it. And I've also been, lucky to be an investor in a couple businesses that support venture debt. So I really love, um, the vehicle, private credit, because it's never going to go away, right? I mean, I think there's AI
Right.
that's going to augment it, but we're never going to get into a place where AI is so great where we don't need capital to actually
Right.
grow our businesses. So that's something that you really can't innovate out of. But you talked about AI agents, so I think there's a lot of automations and technology to make the capital move faster. Within cross border regions, and then also just on the through the payment cycle, right? The whole clearing process of getting payments through. So walk us through kind of what you've been up to recently, but maybe first start with what you went through, after Elite Models, and kind of what you did for some time until you built some software to automate that.
Yeah. Yeah. No, absolutely. Look, I mean, I could have retired like 10, 15 years ago, right? I do this because I love it.
Sure.
And, and by the way, but just to touch on that point, with AI, the cost of goods and services, if you look at the far future, 10, 15 years, it you're going to go into a like a utopia kind of world where the
Hmm.
cost of goods and services goes to near zero,
Sure.
simply because you've got automated manufacturing, cost of goods goes down. It's a period of deflation, and it's bizarre. But what you can buy in 10, $20,000 10 years from now is what you would spend $100,000 today.
Sure.
So 10, 20,000 buys the same that 100 buys today, which is normally we're used to being inflationary, but it's going to be deflationary because the models keep getting better. And, anyway, but coming back to after the last exit, I tried a few other ideas. We did a few investments, set up the family office. And then 6 years ago, the story of how we started with Ocean AI. Originally it was a fintech, and then we were looking at investing in a structure where we could put capital to work, and we would look for companies. And I met these guys in London, and they were literally doing e-commerce, hoodies and sweatshirts, and we wanted to invest with them, and we gave them a solution. We came up with a formula that seemed to work, where we would buy the cargo, sell it at a markup, and it was returning like 45-50% a year return on capital. So we thought, that's phenomenal, right? If we get to make money and do good at the same time, that's a win for everybody. And that's something that we loved. So that's how I got into it. And I said, okay, we started doing the one investment, we did the second, the third, the fourth. Now we're at 20. We're looking to deploy $1 billion in the next 5 years. We're looking to go public on the NASDAQ as well. That's really uh, a fascinating business to be in this time and age, as we pivoted towards AI, because we figured, okay, AI is going to be like electricity. Um, it's really had a phenomenal knock-on effect in terms of efficiency, underwriting, payment collections, and that's just scratching the surface. Over the next 5 years, as agents really come into their own, and you have the agent economy that's going to come alive. That is phenomenal. I was watching a recording of Sequoia Capital, and they were talking about the AI agent economy, and
Yeah.
with inference times getting faster, chip cycles getting faster, the kind of stuff it's really, people don't get, if it's going up 10x a year in 2 years, that's not 20x, that's 100x, right?
Sure.
So it's exponential. Yeah.
Yeah. I would say too, what's really interesting, I read recently, Microsoft, 30% of the code development is AI
It's
generated.
AI. Yeah,
So
yeah, I
that's
saw
really
that.
crazy. I mean, it's gonna, I don't think it's going to kill developer jobs because you still need engineers to build that AI, right?
Right.
So I think they'll just be transferring their skills to pretty much new languages and probably moving over. It's essentially innovate or die, right? So
Yeah, yeah.
and then they've got Agent Force, the whole Salesforce agent
Hmm.
technology. So in supply chain, where do you see the agents, dispersing into? I would say definitely customer support, but
Hmm.
I'm assuming also probably on the fulfillment side, right?
Yeah, I would say so. It's everything to do with underwriting, shipment tracking, payment collections, operations, customer support, accounting, it's really across the board, every single thing. So even cross-referencing bank statements and P&Ls and balance sheets and all that stuff, which used to be manual. Today I can do it. We have a pre-trained model with exactly. Did you try out the ChatGPT, the internal knowledge
I haven't
feature?
tried that. No, what does that
Yeah,
do?
it's really cool. So now you can, memory. You have short-term memory and you have long-term memory. Long-term memory is coming, right? So you have an agent that knows exactly what you did last year, and
Sure.
now you can connect your enterprise server to ChatGPT, and it knows everything about your business. So now you can ask it a question like it's a colleague, and it knows your training
Wow.
module, your standard operating procedures. So, we connected it to the Google Drive, and it know we had set up a subsidiary, and we were looking for a piece of information about, the registration date and stuff like that. And it came up and it referenced the source file, and it was really awesome.
Wow.
The minute they start integrating into HubSpot and accounting software,
Mhm.
then it knows everything about everything.
Sure.
That's kind of cool. Yeah.
Yeah, and I think it automates. I mean, I think there'll be a point where if you're training like an enterprise sales team, if they listen to, thousands of hours of sales recordings, they could essentially have, a human sounding sales rep, go out to market. I don't think it's too far away because it's really just, when you think about, sales and business development, right? You're handling objections, and there's
Hmm.
probably a lot of information that you got to recall from the product that you're offering. So I
Yeah,
think at
yeah,
some
yeah.
point, and the audio is sounding much better.
Yeah.
There was a fund manager that I know. I'll try to share it on this episode. He created an AI clone of himself, and it's a company called, I think it's called Delphi. And
Okay.
what he's done is he's fed thousands of hours of his YouTube talks and talks about him explaining his fund strategy. And he shares a link, and it looks like a phone, like it looks like an iPhone, and it says
Right.
"call me." And when you call him, you can literally just call him and talk to him, and he'll just. I mean, it needs work still, but anything that you want to
This
know
is
about his space, his
right.
sector, it'll be conversational, and it sounds just like him too, because I think they trained his audio to
His
just speak.
voice.
Yeah.
Right.
So it's literally like call him. It doesn't sound authentic because it's, all of his context is about his fund. But I think if you had more personal memories and you had things about his family, it'd add a little more character to him. So
Right.
I don't see it being, any more than maybe 3 to 4 years away, I would say, to be, high fidelity, in my
Yeah,
opinion.
yeah. That's true. I mean, think of it this way. That's the worst it'll ever be, right? It's only
Yeah,
going to get better.
sure.
So in 5 years' time, it'll be hard to tell. You'll need a safe word, right, for
Yeah,
everything,
I know.
right? Because how do you know that the person's actually real?
Yeah, I mean it's impacting, fake news as well, right? I mean there was a movie, I forget the name of the movie, but there was a terrorist that kidnapped the president. I forgot the name of the movie. It's a new movie that came out on Netflix, but the way that the terrorists are creating terror now is they'll grab all these presidents and they record them, and then they send
Right.
something out to the news, and it impacts the stock market.
That's
So the
crazy.
Yeah,
Yeah.
yeah. I'll try to figure out the movie I saw, but it was crazy. It's like you could kill people, but worse, now what you can do is just get them to say stuff that they don't believe in,
And
to
that
move the
actually
news.
concerns me.
Yeah.
So biowarfare, all the other
Hmm.
stuff, that is concerning.
Yeah.
Um, but I think AI is going to play a huge role in the economy. I
Sure.
mean, if you think about a global economy of, okay, in the year 2000, the global economy was what, $33 trillion,
Hmm.
roughly. And 2025, it's 105, 110 trillion, right? So about
Sure.
threefold increase. So you project out another 25 years, let's say modest 300 trillion, 350 trillion economy. If AI makes a dent in it, I mean, this is all hypothetical because I think productivity is going to go through the roof.
Sure.
Just like, when they had farming, the Industrial Revolution, AI is going to lead to a massive surge of productivity. So it's going to be interesting to see in the next 10 years what the GDP rise is like and how the AI agents play into different aspects of a company. Did you see that thing about Facebook now? I mean, the plan is you talk to the AI, you tell it about your company, what you're trying to,
Hmm.
the service you're trying to sell, the
Self-guided,
product.
self-guided media buying, pretty much, right?
Right.
Yeah.
You create the ad, you write the
Yeah.
creative, test it, 100 variations of it, use the best one, and all you have to
Yeah.
do is just tell it how much you want to pay per customer,
Sure.
and it'll go out and do that for you.
Yeah. Because
That
I
is
mean, so
amazing,
we do a lot of media buying, and I mean, we learn a lot, and there's humans that are doing it. There's a human that's managing
right?
all of those workflows, and to your point, if you have intelligence and you have, we have the data within our universe, but
Hmm.
Facebook's got the data of 10,000 other businesses that are similar and dissimilar. They have lookalike audiences. So
Right,
you just pay them an agency fee, right? Which is
right.
probably what you'd be paying or something like that. Or I mean, what's more lucrative for them is they just do a success fee, right? So
Hmm.
so that makes it more irresistible because they're like, look, just pay us if you got results, and we'll tell you
Right, yeah.
exactly. Because what you can't see in Facebook is your cost to acquire a customer. You can see the cost per click, but like when you get the
Hmm.
lead, there's like maybe 4 or 5 steps to actually
Mm.
close the sale,
Close,
right?
right.
So, but if Facebook has all of that natively in there, and they're running the ads for you, then that's great. So that's going to transform. That's definitely going to transform a lot of media
Hmm.
buyers, and they
Creative
may have to
agencies.
be AI friendly. I knew a guy that had a pretty good business what he was doing because the whole short form boom was really big, right? So what he did is he had a coaching business. He would help people script, film. He would coach them how to film the ad, and then he would edit it and then give it back to them. But like
Right.
for me, I use AI for the podcast that we're on right now. So after
Hmm.
this podcast, the entire description, all the show notes, AI handles everything. And we
Right.
also do short form and we use AI.
Mm.
So like AI grabs like the most viral moments. So I don't know, I feel like those types of services might have
Mm.
to change to maybe AI or something like that, or at least be able to use the AI tools to provide efficiency. So I think those guys are going to definitely need to transform. We talked about engineers, just maybe
Mm.
switching code languages and doing more AI versus just Objective C or iOS
Mm.
development. My question for you is, what do you think is going to happen to all the Uber drivers when we've got robo taxis, right? When Elon's got taxis that drive on their own, you don't need drivers anymore, right? So what do you think those
Right.
those guys are going to have to skill up and do?
Well, they're going to have to get repurposed, retrained. I mean,
Mhm.
at least the young drivers, the older drivers, I guess. It's a little harder to retrain someone that's past a certain age. So, what do you do with this new workforce that's available?
Yeah.
Well, that's going to be. But I think we'll create new jobs, just like we did with when the farming. Either you can produce more output. So here's the funny thing. I don't think it's going to lead to a lot of job losses. It'll create new jobs like vibe coding. Have you heard of vibe coding?
Oh yeah. Yeah.
Yeah, yeah. So, it's like a whole new field. Prompt engineering it didn't exist 5 years
So
ago.
there's a fund manager. Shout outs to Yohei. So Yohei is a manager that has graduated from our fund accelerator. I'm like pulling this up here. He vibe coded this site called VCpedia. If you just go to
Hmm.
vcpedia.com, and it pretty much pulls up an entire analytics platform. He vibe coded
Mm,
it in like 20 minutes. And what
no
he's pulled,
way.
yeah. So I'll send it as a recap, but it's
Yeah,
got,
please do.
176 new startups, 310 active investors. So it pulls a bunch of data off the web and then it just shows a dashboard. So he vibe coded the whole thing. So he has a post on that. So I feel, and that was something that I was thinking about too. I think it'd be really interesting if you just pulled Twitter
Hmm.
threads on top LPs and who are the managers that they have been following recently, right? I feel like that's a
Mm,
signal. So people that are following people, they're probably going to only follow them if they're interested to learn more. They're not going to because I mean, a lot of people are thoughtful about their follower count. So if they're
right.
going to follow someone, it's maybe because they just really want to keep them on the radar. So I think just following activity could be really interesting to analyze. And if you could just vibe code a quick dashboard like that, with just a couple prompts, that's crazy, you know.
That's crazy. I mean,
Yeah.
what is the most popular vibe coding platform? Uh,
I think it's called Replit. I think that's the one that I heard of. I think Resplit or yeah, Replit. Yeah, so
okay.
Replit.
Mm,
That's the one that Yohei used, and that's kind of the one that I've been hearing about. But that's going to displace a lot of engineers. But the vibe coding software still needs, hosting solutions and databases and UI. So
yeah,
I feel like they're just going to change jobs to the ones that
that's
are
it.
open. Yeah,
Exactly. But what I'm really excited about is what kind of stuff when you put this new technology in the hands of people that never
yeah,
had access to this, the stuff that they're going to create, it's going to be
sure.
massive. It's going to be, you know,
What's exciting, you've got kids too. So one thing that I've done with my son, I'm trying to teach him entrepreneurship. So
mhm,
we created T-shirts. I was like, hey, why don't you sell T-shirts to your friends? And
right?
he's like, look, I like aliens and I like animals. And we
Right.
use this company called Printify, and Printify has a whole AI interface. So you can
Hmm.
design shirts, and we went crazy. We designed shirts we design sports bottles, and we're like, oh, we could sell this to all your classmates, and it's got his
One at a
name on
time.
it. So, but it's just kind
Right.
of a fun activity because you can create stuff. So I think it opens up a lot of great opportunities for you to train, your kids on entrepreneurship and just allow people to create and manufacture things a lot easier. One thing that we've been looking into is 3D printing. Just the easiest
Hmm.
process to do that. But imagine if you could just
Right.
write a prompt and say, "Hey, give me a 3D orange elephant," and make it
Right.
plastic. If there's a way to manufacture that where you design it and then you ship it to a manufacturer, that'd be really cool. And you can design your own toys, because
Anything.
I don't know.
Yeah.
I mean, you
Yeah.
and I are old school. The toys these days suck. I mean, the toys from back in the day, they're made out of metal and they're like, really cool looking. Um, so if you could design your own kind of toys and things that kids can play with, that'd be really interesting too. So,
Yeah, I think you bring the minimum order quantities down, the cost of goods goes down.
mhm.
It has an explosion of creativity, right? Because then
Sure,
everybody can go out and create something of their own.
yeah.
Um,
What are some trends that you're seeing in the supply chain space? So these founders that have, consumer products, what are, maybe some high level trends, or maybe it's just newer challenges that you're seeing across the board, or maybe there's trends that you're seeing with, a baby supplies company versus like a beer company. I don't know
right.
if there's any, challenges that they're dealing with regulation or supply chain or shipping.
Hmm. Yeah, I mean, there's always macro stuff going on, but again, they announced the China deal today, right? So
Yeah,
that's still hot off the press. But there's always challenges in the supply chain. It's complicated. It's gotten better because of globalization. So before you'd have huge minimum order quantities, you'd have to order a certain amount. It's been now you can have these small e-commerce sellers come up with 5,000 items, 2,000 items, do a run. Um, we don't see a lot of manufacturing out of Africa and South America. We
hmm,
see a lot of it in China, Southeast Asia. I mean, China stopped being a low-cost manufacturer like a long time ago, right? And now you go there because of the tooling, the advanced manufacturing, the automation, just in general, the workforce is so much more skilled and abundantly available.
sure.
And also they have the infrastructure. Like, I read a statistic. I think China was investing 20, $30 billion a year on ports and infrastructure over the last 30 years. So
Hmm,
you add that up, that becomes a huge amount of investment.
sure,
So Vietnam has a lower cost of manufacturing, but in terms of labor is cheaper, but they don't have the infrastructure to support the volume of exports that China has. Same thing with India. I think India has, I think, a fifth of the labor cost of China, which is crazy. But that's the next big boom, I think. India is going to be maybe China circa 2003, right?
sure.
Say 20 years ago. And people, I think there was a deal. I think Tim Cook announced that they're going to be start manufacturing iPhones in India, a
Oh
lot more
wow,
of them.
yeah,
Yeah, so they've been doing that for the last. It's been in the works the last couple of years,
sure,
diversify away. But that those are the opportunities, right? When there's
yeah.
chaos in the supply chain, you can
Do you
step
feel
in.
there's emerging countries for manufacturing? So I know there's some surrounding areas of India as well, right? So Sri Lanka,
Bangladesh.
Bangladesh. I see, a lot of, some of the products I have, are manufactured there. But do you see Africa as kind of like an emerging country to do manufacturing, or do you feel that they're focused, or set for success in other industries?
I don't have a lot of experience with Africa. I know
Yeah.
that a lot of people they have like niche industries that
Hmm.
come out of there,
Sure.
but for the most part, I think it's minerals and commodities and raw materials that come out of there. Um, and again, I think the language barrier with India is a bit lower in terms of English, so they have the advantage there, um, and a huge labor force as well, right? And
Sure.
it's a young labor force, which is they didn't have the one-child policy China had. So
Yeah.
um, I think Southeast Asia has promise. Vietnam,
Mhm.
Thailand, um, Africa. I wouldn't know where to start.
Sure.
If you had, we see Turkey and Portugal actually a lot. They do
Wow.
really good stuff. Athletic wear.
Hmm.
Bangladesh has always been they've been great at garments and shoes and stuff like that.
So you
Um,
mentioned, the workforce becoming more skilled. Do you feel the workforce moving away from some of those labor types of jobs and seeking education, getting into technology? We've seen that. Just me being from India, we've seen that with just the labor force. Like especially with homes that are seeking help around the house. A lot of those people now, their kids they don't want to do this kind of work anymore. They want to go out and go to school, maybe study engineering and get into technology, maybe leave the US as well.
mhm.
So when that happens, I'm assuming, like, if that's happening, especially in China, right, a lot of the people that were laborers, they're becoming more skilled. They want to go out and just get an education, maybe go abroad and
Mhm.
seek more meaningful work. So I feel, and you're going to correct me, but I'm assuming the impact of that might just drive the manufacturing labor jobs to just other countries that still have those types of workers that are available. So maybe that's why we're seeing a great opportunity potentially in India as well, with people, just some parts of India probably just kind of taking on some of that capacity. I'm assuming,
I
right?
think so. I mean, short term, I would say 3 to 5 years,
Yeah,
India will benefit. But I think we're going to leapfrog into automated manufacturing pretty soon. Once
sure,
these models pick up, and you can actually have a factory to build factory parts, and then you have machines making other machines that'll
sure,
build other machines. So,
yeah,
I mean, technically, if you have a factory that can build shoes with
hmm,
one human, I mean, think of the impact that that has. And again, I mean, I was watching an interview. Was it Vinod Khosla from Khosla
hmm,
Ventures?
yeah,
Who was talking about these low cost manufacturing jobs. And he's like, That's not a job. I mean, some guy sticking bolts into a car for 30 years, morning and night, that's servitude. I mean, that's not a really fun job. It's not creative. It's not stimulating. You do it because you got to put food on the table, but
yeah,
that's it. And I think
sure,
those jobs are going to go away, all of them. The
sure.
world will be better for it.
Yeah. No, I totally agree. Um, I'd love to hear a couple insights on the difference between, Southeast Asia and then America, right? I mean, you've done a lot of traveling in the last few months. I mean, not only in Asia, you've been to Europe and, all over the world. So just what are some of the trends, because I haven't really spent a lot of time in Singapore. So we'd love to learn a little more about the culture, the VC ecosystem, the private equity space. And then maybe I'll surface that with just a lot of these trends now with venture getting into private equity, right? There's two or
Hmm.
three mega funds right now that have set up RIAs. Many of them are trying to build companies themselves and roll them up, kind of pretty much the stuff that you're doing already, but they're doing it at the institutional level,
Scale,
right?
right?
So we'd love to hear your opinions on that macro driver, and then just maybe educate us a little bit on the ecosystem in Southeast Asia.
I think, well, the ecosystem in Southeast Asia, the same as the rest of the world. I think the US sets itself apart in venture capital. It has much better risk capital available.
Hmm.
Like, I think that's the only place in the world where you can go out and raise a $50 million seed round for something that has a 90% chance of failure. So think about that, right? And people are okay with it because they're okay to go
Sure.
boom or bust. And, um, that's a gambler's mentality,
Yeah.
right?
Well, I
So,
would say too, the allocators that I've met, they already have other investments that give them the 5% returns that are a little more stable. So
mhm.
they're betting a portion of their allocation, hopefully to get some outsized returns. They know they're going to probably lose everything, but that's the only way they're going to overcome inflation, right? With inflation being like, 8 7 8% a year, if they're just making 3% off of like more of a stable
Oh yeah,
bet,
losing money.
they've got to swing for the fences and hopefully get something that'll drive the top level performance. If not, they're just, they're going to lose either way from inflation. Right.
You're
So
right. Yeah, yeah,
yeah,
yeah. I mean, I think the rest of the world is a little bit more conservative, and this is the
sure.
same with Europe, um, Asia. I think Japan has a bit of a better venture ecosystem,
Hmm.
but it's not big in
Yeah,
the scale. So London, there are pockets of venture capital hotspots. So you have Berlin, you've got London, you have certain pockets of Paris and Amsterdam, but those are small ecosystems, but they
sure,
produce some good companies out there. Singapore is good, but Singapore is more wealth management. It doesn't have a vibrant capital market. It doesn't have like a stock exchange that's doing like phenomenally well. I was in Hong Kong recently, and we were talking about Hong Kong's like London, and then Singapore's like Zurich, so Switzerland. So
sure.
that's where the wealth management goes, and then Hong Kong is the more vibrant capital markets and the big companies. Um, but yeah, Hong Kong's changed as well. I was just there recently, and it's still got the energy.
Hmm.
Um, and there's a lot of crypto stuff going on in
Interesting.
Singapore and Hong Kong. Yeah,
Yeah. How has Hong Kong changed besides the crypto? Is it just more of the mentality of being a little more risk averse than before?
I think politically speaking, it's become more integrated with the mainland than it
Sure.
was before. Yeah,
Interesting.
and that's been changing in terms of the political situation, the courts. It's still Hong Kong, but it's
Hmm.
not like Hong Kong of the 90s.
Sure.
Yeah. So Singapore's taken advantage of that, I
Got
think.
it. Yeah, it's interesting. I mean, it's just really valuable to get these insights, from other regions. When it comes to the fund manager ecosystem, so these
Mhm.
managers that sometimes you probably see them at some of these conferences. What are some high level trends that you're seeing with the managers trying to raise? Are you seeing a lot of these managers struggle? Um, I have. So I was just curious what you're seeing from the allocators' perspective, and what are some of the allocators saying? Are a lot of them maybe pulling back, the ones that you're talking to, and trying to reallocate into other things? I mean, again, everyone's got different mandates, but maybe just some high
Mm.
level observations, looking at fund structures, and then maybe how allocators are looking at those strategies and what they prefer.
Yeah. I mean, as long as, the Fed keeps the rates high, that's going to put a squeeze on liquidity, right?
Sure.
If they lower rates, then that frees up money into the capital markets, into the venture markets. So, because, if you can do 4 or 5% in treasury bills in a money market fund, and then you can do 8%, let's say on the S&P 500 ETFs, diversified. It's hard for you to raise money on an illiquid strategy where your money's tied for 5, 10 years with not many of them even beating the S&P 500.
Sure.
So if you're a family office, you're thinking, okay, I'll do public securities, I'll diversify a little bit, I'll put the rest in a money market fund, I do some real estate, and then what's left over is venture money,
Hmm.
which is, or the illiquid strategy. So, but that's maybe 20% of the portfolio, not that
Sure.
much. So,
Yeah, I mean, I totally agree. I mean, the family offices that I've been talking to, a lot of them are investing in venture managers just to get access to those ecosystems. So, they're
mm,
interested in kind of being part of those communities. They may want to co-invest. Those managers usually are pretty friendly with
yeah,
co-investing with the contingency that you invest as an LP too. So a lot of
right.
times, there's interesting ecosystems. Obviously, if you got a manager that's been in the AI space for 15 years, and now they have this whole concentrated portfolio of AI companies, that's probably the best way that you're going to get into some of these really hard to get access deals as a co-investor. And I think that's the only way where you're going to maybe get some outsized returns directly investing, in exchange for, obviously writing an LP ticket at, whatever the minimum LP ticket is. But many of these other families have, allocations into other assets that are more reliably compounding their capital. So some of them are investing in
Mm,
long short equity managers. Some of them are, building their own portfolio construction through the market. So they've found strategies that have already worked. And then, on the venture side, it's been a little more opportunistic
Mm.
to hopefully get some outsized returns, and then just go to their AGMs, meet other families, get the value of the network, I would say. But again, that's just kind of what I've been seeing. So
Yeah, yeah,
yeah,
that's true. I mean, with fund managers, it's a bit funny, right? Because as a family office, the ones that I want to invest in that have a proven track record, they don't want my money. So
sure,
they're already oversubscribed. And
got it.
the ones that are actually pitching are the emerging managers, which is a hard job for them.
Yeah,
But most families, they want fund three and above or fund
sure.
four and above. So it's a tough world
Yeah,
out
it's
there.
like dating. When you like somebody, they don't like you back, and then when they like you don't really want them, right?
Absolutely. It's a hard job. So, and especially if you're not an institutional, like big
Yeah,
family office where you can write 100 million, 200 million per fund, that becomes a challenge. If you're a
sure.
sovereign wealth fund, then it's a different story.
Yeah. Yeah, and I mean those larger funds, they have to write bigger checks. So then when they write these bigger checks, they have to be essentially investing in a pretty bigger franchise to make it count, right? I mean, to really move 3% of like maybe a $500 million check, that's actually pretty good return, right? I mean, because it's such
Hmm.
a big amount of money, and it's hard to probably find ways to compound that capital. So,
Mm.
um,
Yeah, yeah.
yeah,
I was having lunch with a fund, and they just raised a $12 billion fund. And again, to move the needle, and we were talking, he's like,
hmm,
I got to make some big wins. So
sure.
even if I do a 50 million check, it's not going to move the needle, even if
It's
it
not.
doubles or triples. Yeah.
Yeah. That's
So
why some of the
you're talking,
allocators like these emerging managers, because if you do the math and you look historically,
yeah,
these 30, to $50 million funds, just because proportionally, you're going to see a higher performance just because the fund size is small in proportion to
correct.
the returns versus if you got like a $12 billion portfolio, you got to hit a lot of home runs where like if you hit one home run with a smaller fund, you can actually get your money back. It's just trying to figure out which one is the right one that you think is going to do that. I think that's the hard part, and hopefully you can rely on networks and good people like you mentioned before to kind of help sift through that. I know we're coming up on time, so really appreciated all the support and time and all that you do for the ecosystem. Maybe we conclude this with just maybe a piece of advice, maybe a piece of life or professional advice that you learned from maybe a mentor, or just from building all these businesses over the years.
Well, I don't know. I copy all my best stuff. So,
Hmm.
so it's hard to come up with anything original.
Yeah.
I think anything worth being said has already been said. But in terms of investors, or you thinking from a startup perspective, or you're thinking in terms of an LP hat, we're not a GP, so we don't manage any outside money.
Yep. Yeah, whatever you think. I mean, I think one thing that I could double click on is I totally agree. I mean, nothing really is original.
Mhm.
So I think it's okay to, be inspired by other people's ideas. What was the saying? Like good artists steal, great artists. I forgot what it was. Good artists create, great artists steal,
Plagiarize?
right? So yeah,
Right.
or without plagiarizing, and we're talking about integrity here, right? So with
Right.
your point about integrity, but I think it's good to learn from the experience of other founders. I'm assuming, right? I mean,
Yeah,
just kind of you
absolutely.
don't have to
Yeah.
reinvent the wheel if there's, and I think sometimes that's a good test case if there's a bunch of businesses that already got traction doing something, but you can do it better, faster, cheaper. I think that's kind of a good learning. But yeah, maybe from being an entrepreneur, or maybe from like a mentor, if you got anything.
Yeah, I mean, my advice is always the same, right? Surround yourself with good people, whether
Sure.
they're your employees, your partners, um, your investors, your advisors, people with integrity. And if you do that and you have a fundamentally sound business and you're in the right place, right time in terms of spotting the opportunity, I think any business can do really well. Um, so I would say it's really perseverance because being a
Mhm.
founder is hard, right? It's
Yeah.
not for everyone. Um, Multitasking, I think, is one of the most understated qualities of a founder. So you got to do sales, marketing, accounting, fundraising, and you got to do all of this and then prepare for your liquidity event, which you have to do if you want to have a chance at succeeding. So, and because you got to create value for your shareholders. So the biggest advice I would give is the other piece of advice I would give is most people celebrate fundraising as it's an accomplishment. No, it's an obligation, right? You have to produce a result for these
Yeah,
people. So when you take a dollar, think long and hard. Um, yeah, the days of easy money are, I don't think they're here. Maybe they'll come back, but for a founder, that you have to have that sort of sense of fiduciary duty that
sure.
these people have given me their money. I need to do something good with it, not just blow it on a party.
Sure. Yeah, and I think what are your thoughts on real quick? Just because I have seen that with the AI companies, right? So there's
Hmm.
some AI companies that have a prototype or an idea, and they're raising like a $50 million cap. So I think over time there's going to be more of a requirement to build your own um, ecosystem and sample that
Hmm.
creates AI logic without just kind of being a wrapper on top of ChatGPT. So I don't know what your
Hmm.
thoughts are on that, or do you think it's okay for companies just kind of build off of LLMs already there, or do you think there's going to be a lot more? I love how ChatGPT now is just integrating in with your data. So does it make
Mm.
sense, or does it make sense as an expectation for people to build their own LLMs, or you think it's okay to kind of tap into stuff and leverage, essentially just build versus buy?
Yeah, no, I think it's okay to be a rapper as long as
Yeah,
I think the money's in the application layer.
sure.
So if the actual specific use case for
Hmm.
that model in your industry
Yeah,
makes the whole difference in the world. So, and building your own model, training it, it costs a lot of money
yeah,
and a lot of GPUs, a lot of power. So I don't think, unless you really can go out there and raise a lot of capital,
sure.
and then you can do it from scratch, it's a different
Yeah.
story. But for the most part, I would say founders can just build off open source
Hmm.
or just focus on, let's say, even it's OpenAI or Gemini or one of the models, which they will keep investing
Yeah,
to make the models better.
sure.
But if you can do a good job applying it to your business and your vertical,
Hmm.
like nobody else can, that's unique to you.
Yeah,
So that's where your value is.
sure. Yeah, that makes sense. I mean, we're not sitting here building PayPal from scratch and like building our own
Right.
payment processor, right? So I think things that are not part of the core business, you can let those other infrastructure technologies already handle that, and then just focus on the AI, the user experience of customers, and build that, because I see that a lot now. A lot of them are wrappers, but that just helps them get to market faster, get customers, and that improves enterprise value. So
Yeah, absolutely.
yeah,
I think that's really well said. You shouldn't try and reinvent the wheel. And that PayPal example is a great example. Right? So I think when Amazon was starting, he said, I didn't invent the post office. The postal system was there. The infrastructure
yeah,
was there. I just built
sure.
on top of it.
Absolutely.
Yeah.
Well, hey, Vishal, this
All
was
right.
great, man.
All
Really
right.
appreciate you taking your time, and I know it's late, so appreciate you, man. And I'll see you soon. See you in New York.
Absolutely, man.
All
It
right.
was completely unscripted and a lot of fun, as
Yeah, that's
usual.
usually better that way. So, all
Yeah. All right, buddy.
right, buddy.
Okay.
Take care. Bye.
Thanks. Bye.